Okay, Rudy here, 9th of February. Welcome to the Daily Market Show, where we go through the indices here in Australia, in the US, and the subsectors and the commodity prices. Okay, so starting off with the ASX 300. So a lot of green today in the most sectors. So people happy today. Our share market, we're still capped by the Iron Dome. That's because the banks, financial sector's still capped. The materials sector continues on its merry way, no cap there. If we just compare how it's going to the ASX 300, so we're still on track for this target move of the XMJ over the XKO. So looking on track. Now this little sector here, the energy sector, it's very nice rounded bottoms there. Reverse head and shoulders, whatever. Hasn't broken out yet though. If we compare it to the materials sector, and get the ASX version. So it hasn't. So I went a bit early last week, but that's a very bullish declining wedge there. So once energy breaks that, and I think you'll have energy outperforming the materials sector. If we compare it to the financial sector, get the ASX version. Don't know why it does that. So you can see here, so this sector generally pays a dividend a bit higher than the banks. So food for thought. If you want specific shares, ETFs, whatever, you join $10 a month. Join the channel. If you want ideas, the channel members now have to watch this video because I was doing two and doubling up. So they're all going to watch this video, and then the second video I'll do today will be product specific. So if I'm talking shit, I'm sure they'll tell you. So our gold index is a nice move up. Tech sector had a bounce. There's a couple of shares which oversold with it. I wouldn't be backing up the truck just yet. The S&P 500. So we're doing a bit of stalling at the top here. If we compare our materials sector to the S&P 500, so we can see our materials sector is going to continue this outperformance against the S&P 500. XLK, which is the American tech sector. So it's got a bit of an iron dome there. But the subsector of that to watch is the semiconductors. And if we do the semiconductors over the XLK, so the semiconductors are still outperforming the XLK. But we are reaching a bit of a target move for that. So once this ratio falls down, then that's not good for the tech sector. If we look at the XLE, so this is the energy sector in America. If we divide it by the XLK, the tech sector, You can see a lovely declining channel here. So that was your first signal, so it needs to break here to confirm. That looks like a energy over tech to me. Consumer discretionary in America topping. The consumer staples is breaking out, so you can see that ratio of the XLY to XLP is breaking down. So defensive moves over there. How'd your super fund go today? Your high growth fund? So you're up 1%. My bias, one of my new pet projects is to get people into something like a Australian Super Host Plus, where you can build your own ASX 300 portfolio. It is resource focused mainly. So this is your super fund over the material index. So having a bias to materials in your super fund would have and will continue to be a nice place to be. How's VGS? So VGS has got that topping pattern there. Again, if you had a materials focus, so VGS over materials, you would have been ahead, and that's still got a while to go. Alright, US dollar. So it still had that bounce. Doesn't look great. Our 1 year interest rates have, geez, that's pretty bullish. It's not good for mortgage rates. So the Aussie dollar USD, so it's going to be positive for this. So a break of this, you can see these shooting stars here, shooting star. If they're broken, that's very bullish. So that's yeah. So that's looking good for the Aussie dollar. Gold. So gold's had had that correction last week, all pretty scary stuff. But I think I think it'll take a while to take that. It will at some stage. But this is good because it means it sets a base. So now all those gold miners, people can say, oh, okay, well, it's probably going to hang around this level now. We can start upping valuations. So Aussie dollar gold. So obviously a rising Aussie dollar will dampen this, but still, it's not the right. It's the same with if you want to invest in US ETFs, you don't use a rising Aussie dollar as the only reason. Obviously, it's better to invest in an AS listed ETF that is US based, that's hedged. But there are some good ETFs over in the US where it doesn't matter what the Aussie dollar does. Now if we do the gold, so this is our gold index over Aussie dollar gold. So we see that our gold miners are still haven't really broken out against the gold price, and they should be a leverage play on the gold price. For the Bitcoin punters, exactly, we've had a bit of a pin bar there. It's a bullish candle. So that looks like there's going to be a bit of recovery. It had met its targeted move down here based on this flagpole here. I'll just have a look anyway. Gold over Bitcoin. So I'd rather be in gold. The girlfriend. So silver. Yeah, they were back up the trucks back here. That you can't ask for much more really. What I would like it to do is just to Well, this will be the next test here, 92 bucks. If that's cleared, then she's back on. She's got a mini skirt on, lipstick, ready to go kill. So silver in China is 90 US. So the premium, this is the Chinese price minus the American price. So you can see back here, there's a $44 premium a couple of weeks ago over in China, but there's still a premium of $9 premium, so you pay more in China for your silver than America. The gold to silver ratio, so that has been a bit volatile. Still got, that's the long-term target down here. That's when you should have sold your gold and bought silver. So copper, so you can see that volatility. So I think we just, as I said again, it's good. It's the more that these things can just hang around here, then the miners can get re-rated. Oil, it's my sort of getting, I think you got to be looking at this space. That's just consolidating nicely, and that's a big wedge there. So oil to the S&P 500. So again, a breakout in oil. And there's an oil up, S&P 500 down. Off iron ore. So iron ore's at support. So nothing. I don't expect iron ore to go gangbusters. But our boys do a good job. They're cheap miners, so they'll pay the dividends. Lithium. So lithium's just having a bit of a stall here. Had run pretty hard. I mean, it's gone from 10 to 18. Uranium. So that's good. It's spot price is very illiquid. Most miners sell at a contracted range type thing. Anyway, that's constructive. Up, pull back, find some support, then go. Coal, so thermal coal, that looks very nice. And the met coal, that's up and away. Alright, that's your daily market wrap. As I said, if you want specific product stuff, shares, ETFs here, US, join the channel, only $10 a month. Otherwise, see you tomorrow.